public expenditure and financial accountability, PEFA. If you remember, we discussed that everything we are doing, it's about public financial management. But then we mentioned that what the heck is public financial management anyways? We said it has to do with how government designs policy, raises revenue, and it spent the money generally. That is public financial management. So the mechanism put in place by the government to design policies, collect revenue, spend that money, and ensure that the public financial management system is effective and efficient is very important. But the question we need to ask ourselves is, whatever government has put in place, whatever government has designed, is it really helping the government? Is it really helping in public accountability? Is it really helping to achieve the objectives that government has set for itself? It means that we then have to assess the efficiency and effectiveness of the public financial management system put in place by the government. How do we do that? We do that using what we refer to as the PEFA framework. Now, generally, when we talk about the public financial management system of government, a couple of things will come into place. Number one, what is the policies that government has designed? Now, the policy will be capped as well as strategic planning. Because, like I told you in our introduction, although we are looking at, okay, what the heck is Akufo-Addo doing currently? It has a ripple effect 5 years, 10 years, 20 years from now. The whole IMF and the economic breakdown that we have currently is going to take Ghana about 8 years to recover from whatever we are in now, the mess we are in now. 8 years to be able to recover generally. So it means that as part of the public financial management system, how government is raising money, how government is spending the money, how government is accounting for the money starts from the planning, the policies put in place by the government. But not only that, those policies put in place by government represent a long term. But then every period, those policies would have to be designed into strategies that will be implemented every year. Those strategies that will be implemented is through the budget preparation. So government is going to be preparing the budget. Stay with me carefully with this explanation, because it's going to open up a huge thing in PEFA that you need to understand. So stay with me very well here. The strategic plan is what we want to achieve in the long term. So when this government came, Akufo-Addo said, oh, I want to have a populace that is literate. Okay, how the heck do you achieve that? Oh, free SHS. If everybody have access to free, universal, whatever the heck, education, we'll have a literate community. And if you have a literate country, we'll be able to do well. That is the plan. So that is being implemented over the last 5 or 6 years, and it's going to be there for some time. I don't know what will happen to the next administration, whether they will cancel it or not, but that is the policy. Now, every year, government implement a portion of that policy through budget preparation. But there are two things we must understand when it comes to the budget preparation of government. Now, budgeting is a topic we'll look at later on. But two things we must understand when it comes to the budget preparation of government. Number one is the budget prepared based on the policy of government? So it is a budget policy based. In other words, whatever the government said they will achieve, the policy, is that what is put into the annual budget and presented to Parliament? But not only that, whatever budget government prepares must also be realistic. In other words, it should be reliable. So if government says that, oh, this year we're going to be generating a revenue of $2 billion, whatever the heck, and government is unable to generate that revenue, then we cannot rely on the budget of government. If government says that, oh, our economic growth will be 5% per annum, and at the end of the year, it is 0.something percent, then the budget cannot be reliable. But we have to look at it. There is a policy, We prepare a budget to implement that policy every year. But the budget prepared must be policy based. Number two, the budget prepared should be realistic. It should be reliable. It shouldn't be over ambitious. It should be realistic. It should be reliable. However, a key aspect of public financial management will generally be about how government manages the assets and liabilities of the state. We don't want to borrow a lot and not be able to run the economy. Neither do we want to also have a lot of assets that are not effective, that are not efficient. So as part of implementing that policy, the grand scheme that we want to achieve in the next 5-10 years, we must manage our debts very well. We must know our public assets as a country and manage that asset very well. That is part of the public financial management, because those assets will bring us revenue. Those assets can be used as collateral facility for inflows that will come into the public financial management system of the government. Then at the end of the day, the budget prepared must be implemented. Now, as the budget is implemented, it is important we find out whether government is keeping proper books of accounts. So, accounting systems or accounting and reporting is going to be key as part of the public financial management system. Why do we need accounting? Because of two things at the end of the day. One, transparency, and two, being able to hold the government accountable. Accountability. So, what do we mean here? Okay, government says that they want revenue. All right. In the budget, they said they're going to go for a loan. Okay. They issued some bonds. Okay. What was the interest rate? Which people bought the bond? Why did we pay so much interest rate? Okay. Government said they're going to sell some state properties. How much did we sell it for? Why did we sell it at that price? All that is part of the public financial management system. So really, at the end of the day, we have to find out the system put in place by government on budget preparation, on the management of the assets and liability, on keeping of accounts, making sure that the public finances are transparent, making sure that government can be held accountable, must be assessed whether really it's working the way it is supposed to work or it is just an audio or lip service. The framework we use to assess the strategic plan, the budget preparation, the management of assets and liability, the accounting and recording in respect of the public financial management system is what we refer to as the PEFA framework. All we want to find out is how efficient and effective is the public financial management system of government when it comes to their budgets, when it comes to their asset management, when it comes to their accounting, when it comes to transparency, when it comes to accountability. How effective, how efficient is it? That's all. Now, let's expand the discussion a little bit from there. Let me give you some one-liner definitions, then we're going to be rolling back into my slide. The PEFA program provides a framework for assessing and reporting on the strength and weaknesses of the public financial management using quantitative indicators to measure performance. So the key thing here is that we are assessing and reporting on the strength and weakness, period. Now, this is a direct question the examiner can ask you, so please make sure you stay with me carefully. The PEFA framework identifies critical performance dimensions that we have to look out for. In other words, when we are saying we are going to be assessing the strength and the weakness of a public financial management system, there are key dimensions that we have to look out for. In other words, there are key aspects that we have to look out for. These dimensions include the following: credibility. How credible is an open and orderly public financial management system? In other words, is the budget realistic and implemented as intended? Like I told you earlier, you prepare the budget, it has to be realistic. You prepare the budget and it's being implemented, it must be implemented as intended. So if you prepare a budget, but the budget is not realistic and the budget is not implemented as intended, then we cannot rely on the budgeting system of the government. So in that case, we would say that the budgeting system of government is not credible. Why? Because it's not realistic, it's not implemented as intended. Number two, comprehensiveness and transparency. Public financial management system rises and falls on transparency. So anything that a government intends to do cannot be shrouded in secrecy. This is not anybody's mother's business or father's business. This is a national thing. So every information should be made available to the public. That is transparency. So the question is, the public financial management system, how government raises revenue, how government spends that money, do we have detailed information about it? Or is the information available to the public as needed? Yes, it's not all information that can be given to the public. All right. That is why, there is the Right to Information Act. So if there's any information you want about any government thing, you can walk to the institution, write a letter to them, back it with the your rights that you have in that act, and the institution is going to furnish you with the data that you need or the information that you need. Now, if they can't furnish you with that information, they will tell you. But there are certain information that are of national security interest, so they will not make it available. But as much as possible, whatever that has to be made available should be made available. 3, policy based. Again, I discussed this with you. The budget that the entity or the government prepares must all be policy based. Okay, you cannot just prepare a budget. Oh, I want to do that. No, it has to be policy based. It must be well structured. There is a goal, there's an objective, there is something that you intend to achieve. Hence, you prepare the budget around that policy. Predictability and control. This has to do with how the budget is implemented. Are there control systems in place to ensure that there is no over expenditure, there is no judgment debt, there is award of contracts to entities or individuals who don't qualify for the contract? That is predictability and control. Is there anything like that? Yes, in a way, that is why the commitment accounting system is in place, where immediately we award contract, immediately we send out a purchases order. What do? We take the money from the votes and then we put it into the commitment account. When the things are received, the service is rendered, and everything is okay, we then move the fund from the commitment account into the expenditure account. That is one mechanism to ensure that there is control in the implementation of the budget. So we're going to be assessing that. Next one, accountable, recorded, and reported. Very important. It's part of the key dimension on the overall that we would have to measure for every financial management system. And we'll get into this in a moment. How do we keep records? Are records kept properly? Are records completed? Are records or information disseminated as required? We have to measure that. Then certainly, external scrutiny and audit. Is the public financial management system designed in such a way that there is an independent authority or institution to scrutinize the records of government and issue an independent audit report without fear to be sabotaged, to be removed, or to be ridiculed? That is external scrutiny and audit. And again, this is where the Auditor General comes in. And if you follow the public, you follow the news, there are a lot of issues that has been raised by the Auditor General in his reports on various things, from the COVID fund, from our normal accounts of government, and the various things. So yes, that system is there, but as to whether people are being punished, people are being prosecuted, people are being held accountable for breaching the Public Financial Management Act and other acts of government, that's another story for another day. But these are the dimensions. And so I want you to pay attention to this very well. It's a direct question that you could be asked to explain the critical performance dimension of an open and orderly public financial management system. So what does the PEFA really do for the government? Yeah, we've mentioned that it assesses the strengths and weaknesses of the public financial management system of government. Yeah, we've mentioned that. But what does it really help governments to achieve generally? One couple of points here. The tool helps government achieve sustainable improvement in public financial management. So, you see, anything that is measured is going to be improved if there are deficiencies. So the PEFA framework helps the government when they assess the performance, they realize that, oh, we are not doing well on our budget. We are not doing well on the accounting side. We are not doing well on the audit side. Okay, what do we do? Okay, let's change this officer. Let's bring in this person. Let's change this system. Let's adopt this software. It helps the government to improve upon the public financial management system. Two, the PEFA report also will outline the economic environment faced by the public sector and examine the nature of policy-based strategies and planning and analyze how budget decisions are implemented. That's the second thing generally. Because if we have the budget prepared, how are they implemented? Are they implemented as intended? Because remember, whatever we are doing, there must be value for money, number one. But also, whatever we are doing, we must ensure that it brings about increasing in the welfare of the citizenry. So you have a budget, the budget has been implemented, but did it achieve the intended results? So if, for instance, you spend whatever the heck, 5 million Ghana cedi on NAPCO, what the heck was the outcome of that? When we do the PEFA, it's going to tell us. Three, the PEFA, is used to obtain the snapshot of their own public financial management performance. It gives us a snapshot. So at the end of the day, we're able to know, okay, when it comes to financial reporting, this is how we are doing. When it comes to accounts preparation, this is how we are doing. When it comes to auditing, this is how we are doing. And like I said, we're going to be getting into some real calculation and computational issues in a sec, and you're going to be getting how all these things add together. Then the last thing is that the PEFA program itself will provide some support to various government institutions to help them to improve their performance in the public financial management system. That is the secretariat of the PEFA. The PEFA program will provide government with some assistance support to help them both in the assessment and the improvement of their public financial management system. So number one, gives us a snapshot on our performance indicators. Number two, tells us how we have implemented our budgets and whether the budgets are implemented as intended. Number three, helps us to improve upon our public financial management system, which is what we want to do always. So we've mentioned what the PEFA is seeking to do. We've discussed what the dimensions are in an open and orderly public financial management system. However, to really assess the performance of the public financial management system and whether it is efficient, the PEFA framework designed 7 key pillars that will guide us broadly when it comes to the assessment of the public financial management system. Now, we're going to take the pillars and then expand on the discussions on them and see how we're going to be assessing the government's performance.